again to another market weekly recap video of the trades I took this past week. So to start off, I will look at Monday. This is my first trade on Monday and I took a loss. So I'll just break it down to show you how I was looking at the market. Okay, so Monday the 8th, this is what I was looking at. We have our weekly chart. We have our strong high here and our weak low here, and the confirmation of this pullback ending here when it created a QM, opposite QM. So that's my lower high. And then on this price action now is where I was marking my key levels. And as you can see, we have an unmitigated wick here. And we have another imbalance field price action that's just here, which was mitigated. But we have previous week high as our liquidity. And we have the previous week low as our liquidity as well. So I marked up this unmitigated wick and this unmitigated wick as my weekly key levels. Okay. Then I went to the lower time frame, which is my daily. Initially, I was looking at this as my daily, that we have our weekly key level here. But I was anticipating that if price breaks this high, this one, then these suspected highs will not hold, as price will not have any POI to reverse from here. So if it breaks this high after taking out this key level, price would most likely come to mitigate this higher time frame key level. So at this time, I marked out my daily key levels, which is my imbalance field price action here. And I was just waiting for this previous week high to be taken as liquidity. Okay. Then I went to my H4. On H4, we have a bearish range. We have this strong high here. Price ran this liquidity and it broke down the structure. And when it was going down, it didn't create any QM until here. It took out this three candle formation, but the major one was this one. So this was my bearish H4 range. So with this being my bearish H4 range, this high was my previous week high, which I was expecting to be run. As you can see, price pushed up aggressively and did not create any three candle formation that price can confirm a QM. So I was anticipating price to take out this high as price got in straight. Okay, then I go to my H1. On my H1, this is what I was looking at. Bullish range. Okay, this is a strong low. That's a weak high. And price has retraced into discount. So you can see this is my premium and discount. Price retraced into my discount and mitigated a higher time frame key level. So I'm expecting price to now come and take our previous week high. So I'll go to my lower time frame to look for price action that can give me a confluence that price is about to take the high. So I went to my M15. This was my M15 chart. I looked at this as no internal range liquidity, so price was supposed to give us a T1 or a T2 for us to continue shorts. Okay, as you can see, we had a strong high here on M15, and this three candle formation automatically makes this a weak low. But if price doesn't give us a T1 or T2 when it approaches the key levels that are in this M15 range, then chances are high that it's going to break that high. Okay. As you can see here on the M15, we have a strong low. Price ran this liquidity and then broke this structure and actually took some highs here. So I was looking at this as a bullish range from here to here. Let's go to my entry. Okay, so now I was looking at this as a strong low, run on liquidity, break of structure, and that three candle formation being my opposite QM. If I go on my lower time frame, which is my M5, you can see that that three candle formation was taken to confirm this range. Okay, Then when price came down, I was not on my charts. I would have taken my first long here, like this. Okay. Then targeting the M15 high, that's here, as my liquidity, because there is no internal range liquidity here. Okay. So this would have been my first trade, but I missed it. Okay. I then waited to see if it's going to break some structure. So if you have a look, price took out these highs. So when it took out that high, this was a strong high, as you can see. Run on liquidity and break off this structure. Strong high was taken. So I went on my lower time frame, which is my M1, to look for possible entries as this became strong. Okay. So as you can see, we have QM here, which you can confirm either by this run in BOS or this major BOS. Okay, and it took out this high. Then price created a QM, broke down. Okay, then I was waiting for price to come to this key level. All right, but as you can see, we didn't have any three candle formation here. So I waited for price to create a T2, and this is what I saw as my T2. This one. Trap here. So that's where I saw my trap, as people would want to buy from here and put their stop losses down here. So for me, that's what I used as my trap on this setup. Then I entered here, and my stop loss, I put it a little lower because I thought this would be failure swing. As you can see, if you go on higher time frame, on my M5, you can see that there's no internal range liquidity here. There's no internal range liquidity here. Let me just zoom that in. There's no internal range liquidity here. So I thought that price was going to make this the liquidity. Okay. If it was going to make that the liquidity, then what's the closest POI to liquidity? I went on my higher time frame, I think M15, or let me see, H1. Yeah, I found it on H1. So on my H1, I have an unmitigated wick here. That's where I placed my key level. Then I went to my M5 and said to myself, if this is liquidity, my closest POI to liquidity would be this key level. So my entry was up there and my stop loss was below this key level, as price could take out this level and then mitigate the higher time frame key level before going up. So that's why my stop loss was wide in this instance. But regardless, as you can see, price just came and took me out, and then it went with my direction. So my direction was correct, but my entry was wrong. So that was a -1 on a Monday. So I'll go to the Tuesday trade and we go to the next one and next one. All right, so on Tuesday, this was my price action, and it's a new day, and I marked my key levels. So we still have this key level from the previous markings of the previous week, and we have our previous weekly high still in place that I'm looking for price to take out. So if you go to my H4, this was my H4, I was looking at price taking out the previous week high and mitigate this key level before dropping. Okay, or price could actually come and mitigate this key level and go up to take out the previous week high. Okay, then I went to my H1. H1, I was looking for price to take out this external range liquidity because it had already tested the discount of the range. Okay, so I was just expecting bullish price action from here until it takes out that previous week high. Then we go to my entry. All right, So on my entry, I looked at the strong low, this one. This was my strong low on M15. So you can see. Then we have a confirmation of the range here. Run on liquidity and BOS here. Okay, I can actually use this one. Okay, so now we have our M15 range. We have our premium and discount like this. Okay, and I was looking to buy anywhere below the discount. Because we had this range and I do not have internal range liquidity to be taken here, I was waiting for price to create a T2 this high. Okay, then it came to take this low and it mitigated a POI right here. Okay, so the first entry would have been on this key level, this one, like that here, and target profit, our weekly external range liquidity, not week, our previous week high was the target. Okay, but this is not the entry that I took. I went on lower time frame after price mitigated this key level. I went here, M3 on my 3 minute. As you can see, price mitigated that key level. After mitigating the key level, it created a 3 candle formation up there, and we did not have any internal range liquidity here. So I waited for price to give me a T2 or a T1. So you can see price came down, went up, came down, and went up, breaking this high. After price took out this high, people would start wanting to buy from here, this level. So that's where I saw my internal range liquidity being generated, and I placed my entry right there, which is a high time frame key level. I think it's on, let's start on H1. Now, 30 minute. Now, 15, 5 minute, 3 minute, 2 minute. So I think I just took it from this order block, which is 2 candles going down that are closest to this liquidity. Then I put my stop loss at my safe stop, which was below that low, with a 3.5 pips stop loss. And as you can see, I was right again about the direction, but the entry was wrong. So that was my second loss of the week. So I'm on -2. So let's go to the next trades. All right, so my next trade was on Wednesday, and this is the new daily chart that I was looking at. As you can see, price took out the previous week high, which was the liquidity I was talking about, but missed our key level. So key levels are important, but when structure takes over, we have to follow structure than key levels. All right, so the previous week had been taken. So I went to my lower time frame, which was my 4 hour. So as you can see, we have a 4 hour range from here to here, and price took the previous week high and now has taken this 3 candle formation to confirm this lower high in this range. So that's it, lower high, lower low, lower high, which has been confirmed by price taking this 3 candle formation. So I was expecting price to come now and take this external range liquidity. So I was looking for sales. Okay, then we go to our H1. H1 was here. Okay, so on our H1 we have this strong low being taken. So this is the first strong low of the H1 bullish range. From here to here was our H1 bullish range, but now our H4 is confirmed bearish. Okay, because it took out a strong low on the H1. So all the strong lows I expect to fail. All right, so now price took this low. We go to a lower time frame, M15. On my M15, this is what I was looking at. So this is my M15 range from here to here. All right, and this range has been confirmed, and we have a key level above the M15. So I was expecting price to take out that Asia high because it's not a strong high, so it becomes liquidity. Price to take it out, then continue down. All right, then my entries were as follows. We have our M15 range from here to here. Okay, then since I was expecting the Asia to be taken, which is this one here to be taken, I then looked for an entry right here when price came to mitigate. Let me just delete these. Price came to mitigate this M15 unmitigated wick, as this low was used as liquidity. Okay, so price stepped into it. That's where I put my direct entry, and my stop loss was just above Asia high, and I took a 5.3% in this trade. Then price came up to mitigate a higher time frame key level, which is this one, somewhere here to somewhere here. Yeah, let me check. H1, yeah, I believe it was the H1 here, the order block of this candle. So price mitigated that, and I took that as a direct entry. As you can see here, price used this high and this high as liquidity. When price entered here, I took the direct entry and I put a 5 pips stop loss. Then I went on my lower time frame. On my lower time frame, I saw that price take me in here, take me in there, push down, but push back up. Okay, so I was in drawdown all this time. So when I was in drawdown, I looked at this as a range, strong low, and price took this high. So there is no internal range liquidity on this leg. Here, there's no internal range liquidity on this leg. So I expect this price to be taken. Okay, this low to be taken. But what did price do? Price then gave me a low and a high, another low, and it broke this high, setting up for a T2. So this T2 trap validated this range. So I then put my entry here. Okay, I don't usually put less than 2 pips stop loss, but because I was in drawdown on this one, I then put my stop loss at 1.8 pips and targeted this high for a 2R trade. So this trade, I took it off, I think, when this confirmation was made. So I took a small loss. I think I closed the trade somewhere here. I took a small loss. Even if I took the full loss, that's just 1% loss, okay? Because this trade made me 2%. So this trade managed to cover this loss and make 1%. So that's the next trade I took. So today on this day, I took 5% plus 2%. That's 7% minus, let's just say 1% here. So that's 6%. Okay, so that's the trade I took. So let's go to the last trade I took for the week. Okay, so on Friday, this was my daily chart. On the daily chart, we have our key levels marked up here. That's a key level which has been mitigated. So if price has mitigated this level, if it comes back up, it's most likely to mitigate this higher key level. But if price has already mitigated this key level, I'm expecting it to drop to take out this low. Okay, so now I went on my lower time frame, H4. So as you can see, H4 gave us a BOS here. This was my external range liquidity on H4, and it was broken here. So after external range liquidity is taken, I expect price to pull back and continue. But we wait for lower time frame to confirm if price is starting to pull back. Then this is our external range liquidity of our daily chart. Remember, this is the daily. This is the daily. That's the daily low. That's the lower high. And price is supposed to come and make a lower low on the daily. So this daily is most likely to be taken. So now we went on H1. And on H1, I saw this as liquidity, and I was expecting, I saw this as liquidity, and I was expecting it to be taken and price to go down. Then I went on my H4 to update price when it took out this daily low. Daily external range liquidity has been taken as anticipated. Then I went to look for an entry on my M15. I just looked at this range. Let me just go on M1. As you can see, price took out this high and broke structure and created a QM here and created an opposite QM here. Okay, to confirm our range, we do not have any internal range liquidity on this range. So price was supposed to give me a T2, same thing as usual. Price broke this low, people start selling here. Okay, then I enter above the trap, which is here, and target external range liquidity. So I have my 3 pip stop loss and my 3.3 R trade. So those are the breakdowns of the trades I took this week. And I took 2 losses. Okay, 2 losses. And then I took 1, 2, 3 wins. I took 3 wins. The other win was 5%. The other one was 3.3%. Okay, which is this one. Then we had a 2% win. So that's average of what? 5, 8, 10. So if I took 10 R and I lost 2 trades, I'm up 8%. Let's just say that one which I took off before it hit my stop loss was a loss. Let's just say I have 3 losses. Still, I'm on 7%. So if I'm on 7% per week, that's 21% in 3 weeks, 28% in a month. So I wouldn't advise you to take too many trades if they are not clear to you, because there's really no need. You just need to take your high probability trades that make sense to you, and then you capitalize on them. And don't worry if you make mistakes and if you take losses, as long as you can catch the moves, at least 3 hour trades, 5 hour trades, 6 hour trades per week, then you'll be fine.